In his book, The Future of Business Journalism, Why It Matters for Wall Street and Main Street, longtime journalism professor and media analyst Chris Roush points out that stock ownership has been falling over the years in somewhat dramatic fashion. In The Future of Business Journalism, he notes that even though Gallup polling in 2020 found that 55% of Americans own stocks, that was down from 67% in 2002. He also points out those figures can be a bit misleading. In fact, the Federal Reserve data estimates that just 14% of American families have a direct investment in individual stocks, meaning, as he writes in his book, quote, most people invested in the market are doing so through a mutual fund or a retirement account. Still, the media coverage of individual stock performance keeps getting louder. It's the sort of noise that Nobel laureates in economics such as Eugene Fama, Robert Merton, Myron Scholes, Harry Markowitz, and William Sharpe, to name just a few, have been warning investors about for decades. To discuss this dichotomy between what media pundits seem to be talking so much about and what's actually happening on America's main streets, we've connected with Professor Roush, who is the dean of Quinnipiac University's esteemed School of Communications. Hi, Chris. Thanks for taking the time today to join us.
Thanks for having me, Murray. I appreciate it.
In your book, you observe that most Americans don't deal with stocks intimately enough to warrant a constant eye on financial news, just as most people don't need to check their 401k every day. You also write, stock market coverage is a classic story that shows the current problem with business journalism. Can you elaborate?
Murray, that's a great question. I think on average, we have 30 to 40 stock market stories being written every day across various media organizations, from Reuters, Dow Jones, Bloomberg, the AP, opening stories before the market opens, closing stories on the weekend about how the market might do on Monday morning or how it might do the previous week. And I would argue that the average person, given the statistics that you cited, really should not be reading all of those stories. They really shouldn't be going into their 401k plans or their IRAs and day trading based on what they're reading every day about what's happening in the stock market. I surely don't. I very rarely, if ever, look at my retirement accounts. And I think I may have traded one stock in the past 10 years, and it was a stock that my grandfather gave me after he passed away in 1987.
Sure. And as the statistics in your book indicate, the trend is clearly away from trading in individual stocks, dealing in individual stocks. What is the disconnect with newsrooms in America?
Boy, Murray, if I had the answer to that question, I may not be sitting here. I'd be making a lot of money as an advisor for these media news organizations. I think that they're all chasing the very high-end consumer of business and economics news, the people who sit on trading desks at Wall Street firms, who do need to read this content. And who do absorb this content to make trades on behalf of the portfolios that they're managing. I think that's what it really boils down to, is that they're writing these stories for the 1% and not the 99% of us. And there's nothing wrong with that.
Well, but these are very small audiences that they're targeting. The Journal, Wall Street Journal, is a mass market business publication, but certainly targeting very high-end elite crowd. Cable news, financial networks like CNBC, they don't have that huge of an audience, however, right?
Yeah, I mean, I think CNBC's average audience is a couple of 100,000 during the day, which is not a lot. So, I mean, you raise a very good point that even though this is a very important audience to be writing for or shooting video for, it's a very limited audience.
Yeah. So, but still, the average investor out there sees all this coverage and he or she probably thinks, this is what everybody's listening to. I should listen to this.
And I would hope they would not, to be honest with you. I have always said in teaching students who want to be business journalists and who go on often to write about the markets, if you were any good at predicting what stocks were going to go up or down, you wouldn't be writing about them. You'd be investing and you wouldn't be in journalism. I have never understood why people look to journalists and publications to make investment decisions, because we're all just reporters and editors.
Do you talk to your former students who over the years have, I assume, gone on to very esteemed business publications? Did they get somewhat jaded after a while, or what's your feeling about the perpetual onslaught of journalists going into the profession?
They do get jaded, particularly when it comes to writing about the stock market on a daily basis. And I actually interviewed some of them during the writing of this book, when I was writing about the stock market in the book, to ask them about their experience. And one of the general comments was, there's only so many different ways I can write about the market going up or the market going down in the span of a few months before I start repeating myself. And how do I really know what's causing the market to go up or down on a specific day by only talking to a couple of traders or a couple of analysts, or a couple of big mutual funds that are in the market? You're just really doing the best job you can, but sometimes we're writing about the market in a way that we may be totally missing the story for that day.
Yep. Chris, great stuff. I really appreciate you taking the time today. And again, the book is The Future of Business Journalism, Why It Matters for Wall Street and Main Street. Who's the publisher, Chris?
Publisher is Georgetown University Press.
Okay. And again, it's a great book, Chris. I really appreciate the time and effort you put into researching this topic.
Sure. Thank you.
Thank you.
Bye.
Bye.